Gold keeps going higher and higher. What does this tell us about gold? And more importantly, what does it tell us about what's going on with the dollar? Here to talk about this and more is Lawrence Lepard. He's a managing partner over at EMA, but he's also now a best selling author. He is out with his first book, The Big Print: What Happened to America and How Sound Money Will Fix It. I read it. It's fantastic. It's on my coffee table in New York City now. And what a title, Larry.
Well,
Sound
thank you,
Money.
Danielle. Really, yeah, nice to be with you again. Yeah, sound money, we need it, and gold's the alarm bell. It's or the canary, right? I mean, it's just relentless how it's trading up, and it obviously is signaling the serious monetary dysfunction that the world is experiencing. And ironically, the book talked a lot about that. Fortunately, I got the book out in time because I think it's coming pretty soon. This big print.
I was going to say perfect timing for the book. I was
Yeah.
sad to hear that this is a one-shot deal for you because you're a great writer. It's a fantastic book,
Oh,
easy
thank
read.
you.
But I think I like how you said you wrote this because if you're in Bitcoin, you read the book, you get it. If you're a gold bug, you read the book, you get it. But for folks not in these camps, they're not even familiar with the notion of what is sound money, and it
Right.
really serves as an educational tool, Larry.
Thank you. Yeah, I'm glad to hear you say it. That's really was the goal. I want average people to understand why they've been taken advantage of with fiat money. And we all get it. And I tested it with a lot of average people. And I mean, I give you an example. First person I gave it to came back and said, "What's the Federal Reserve?" And I said, "Okay, I got to explain this, right?" And so I tried to write it so you could hand it to any citizen, they could read it, and they would go, "Oh my goodness, I now see why inflation is eating us alive, and I see what's broken. And by the way, I think I know how to fix it, which is gold and Bitcoin." So
Larry, let's talk about the underpinnings of this gold move, though, because even some gold bugs are nervous, um, you know, looking at this run up. I mean, is it sustainable?
it's a great question. I don't know the answer. Certainly when a market goes parabolic like this, often it will correct and correct significantly. But we just don't know. I mean, if it is a case of people truly losing faith in fiat currencies, it could be very sustainable. It could go much higher. Using a lot of the traditional metrics, gold is still quite undervalued compared to all the money we've printed. But one just doesn't really know what the path is. I think, would it surprise me at all to have gold correct back down into the high 20, 2,800, 2,900? No, not at all. But I don't think we're going back to the 2070 that we broke out of last March. I mean, the fact of the matter is we are now in a gold bull market very clearly. And I think over the course of many years, it's going to be much higher pricing because it still has quite a ways to go to catch up with all the money we printed.
Let's talk about the pressure on the dollar. Does President Trump want a lower dollar and why?
Yeah, I think he does very badly. I think Basent does too. And Basent they've even said kind of in code that they want to remain the reserve currency, but they want the dollar price lower. And really, you have to get the dollar price lower if you want to, balance trade. And so I think that is part of their policy objective, what is being called maybe a Mar-a-Lago Accord, which would be to push the dollar lower. Of course, China wants to keep their currency weak as well, so they can continue to export to us. So we've got a little bit of a currency and trade, not a little bit. We've got a big currency and trade war going on. There was a guy on Twitter who had a really great comment. He said, China and America are getting divorced, and trade are the kids. It's kind of a mess.
That brings up a solid point, though, Larry. You can have a lower dollar but still remain the reserve currency.
I think you can to a degree. I mean, the reserve currency is a function of who's transacting and what. I mean, first of all, we are slipping in terms of reserve currency status. We used to be 95% of all oil trades. Now we're 65%, and countries are trading in their own currencies. But let's face it, the dollar still is the most liquid, widely used currency for most trade. So, and that's not going to disappear overnight. But we could have it be weaker against all the other currencies. I mean, to me, it's Brent is a friend of mine, and I really respect him in his dollar milkshake theory. But these are all fiat currency pieces of paper, and so where the dollar is against the other ones, I mean, that's going to move around all the time. the crosses that matter to me are the dollar against gold, the dollar against silver, the dollar against Bitcoin, because those are the things that can't be printed. And it's funny the way all these countries take turns printing. Like right now, China's printing like crazy. We're not. But, I think that'll change.
You think we will ramp up those printing presses again?
I absolutely do. And that's really the thesis of the book. The book's title, as you know, is The Big Print. And really, we've had two big prints already. We had one in '08 and we had another in 2020. And I think another one's coming. And as the book lays out, this is just because of what I call Stein's law, that if something can't go on forever, it will end. We cannot grow debt faster than GDP forever without there eventually being either a collapse of the system or a demand for massive, growth in the money supply, which really is inflation. And the Federal Reserve's third mandate, the unwritten one, is financial stability. And when financial stability gets threatened, they run to the printer, and they will this time as well. And it's interesting, they kind of, in a way, that the administration kind of ran to the printer, or financial stability got threatened and they changed. I mean, remember on, the big dip on April 7th, when the stock market got absolutely crushed, the bond went up 80, the 10-year bond, which is the basis of the financial system, the core layer of the financial system went up, 70 basis points very, very quickly to the mid fours. And, I think Bessent went to Trump and said, hey, you got to reverse these tariffs or put a 90-day, hold on these tariffs, or else we're going to lose the bond market. So it's, you can see the threats are growing to the bond market, to the stock market, and then by extension to the currencies, right? The dollar is through 100. Dollar started the year at 109. It's down 11% in a quarter. That's a big move. So.
Well, you're bringing up an important point that there are rumblings that the Fed already has a bailout prepared to the tune of, $2 trillion. I mean, any insights there? Is the bailout ready to go?
Yeah, I think so. I don't know, and we don't know what they'll call it, and they've got a lot of sneaky ways of doing it. They talked about, the Brookings Institute had a paper where they said they're going to maybe issue swap lines to the hedge funds that are involved in the basis trade, and that's a long story. But what it basically means is that the hedge funds are buying Treasury notes, and we've got to roll over $7 trillion of Treasury notes this year. Hedge funds are buying them, and the Fed is more or less saying, look, if you get underwater in that trade, we'll send money to you, which is a printer. They're talking about taking away the supplementary leverage ratio for the banks, which some people have called QE infinity for the banks. And that's just an accounting rule that would allow the banks to buy bonds. I mean, the problem the U.S. has, Daniela, and you know this, is we're just in so much debt, and we've got to roll all that debt over, and, the buyers are getting scarce. And so, we're starting to look like an emerging economy. I mean, things are happening that should not happen to the world reserve currency. What are those? The stock market's going down, the bond market's going down, and our currency's going down all at once. And that hasn't happened in a long, long time, if ever, in recent memory. And the countries that have that happening, they're generally emerging market countries with a currency problem, with a debt problem and a currency problem. And so it's now happening to the world's reserve currency. And, everyone thought it couldn't because we are the dollar milkshake and the cleanest dirty shirt. But guess what? If you pursue, third world currency, policies, you get third world, currency results, right? And that's what's happening.
Yeah, well, that's what terrifies me, Larry. It kind of has me screaming, saying, when are we really going to take the debt? I know we take the debt seriously, but I mean, the powers that be, and maybe they do and they don't want to show it. But what are they going to do about this debt problem? It's not even a problem. It's bigger than anything.
Yeah, Danielle, it's the elephant in the room. It amazed me. We had a presidential election last year and never even got discussed. I mean, I don't think they're going to deal with it until a crisis occurs, and that crisis is likely to be a combination of very, very high inflation or collapsing, stock and bond markets. And, I'm not sure how that'll unfold, but, as I said to you before we started recording, I'm very glad I got the book out when I did, because it feels like it's coming right now. I mean, things are really happening. These moves in gold and the bonds and stocks, these are not insignificant moves.
2 points. It does feel like it's really happening. I feel we're having a hard time labeling what it is, but everyone I speak to in my circle, Larry, the experts like you, all, are using the word some sort of reset. It feels like some sort of reset is coming. Does it feel like that to you?
It really does. And that's what needs to happen. And I think it probably will happen, but typically in the government, it's not, you have to have a real crisis before a reset happens. one positive thing. I mean, Secretary Bessent last summer gave a speech where he said he understood the problems with the world monetary system, and he felt like something akin to Bretton Woods, the last big monetary conference, was called for, and if it happened, he wanted to have a seat at the table. So I think he's very aware of the underlying issue, and I think he's prepared, and thinking about how to solve it. And there's some who would even argue that maybe they're thinking about a reset to gold. I mean, I thought it was interesting over the weekend that Trump tweeted that he who has the gold makes the rules. And then in turn, I've also noticed a lot of gold flowing from overseas back into the United States, which, one could argue maybe they're trying to refill Fort Knox. I'm of the opinion that Fort Knox was raided by Johnson to support the London gold pool in the 60s. I mean, there's gold in Fort Knox, don't get me wrong. I'm just not sure all of it's there. that I think it was raided at some point. So, yeah, it's possible that Trump and Bessent are thinking gold reset. And frankly, they should be. I mean, the solution to the problem, the book describes this. There's a chapter 22 is policy response, and talks about what we should do. I mean, there's a way out of this problem. Currency crises are not rare. They've happened all over the world for 100 years. And the positive thing, Daniela, is that when you solve them, things get better. Did a pod with a guy who grew up in Argentina in 1991. His parents were buying food every time they got paid as quickly as they could because prices were going up so fast. And of course, the currency failed and they reset to the dollar. He said a year later, Larry, everything was fine. So if we go back to sound money, and that's what the book talks about, we can repair this. This is not, if we don't get into a shooting war and we don't totally crater the economy, this is not doom and gloom. There's a solution here, but it's not, we're not going to solve it by printing more money. We've got to solve it. I mean, and by the way, going back to sound money, it'll be a one-time painful event for some. So.
You mentioned inflation before. That was the other point I wanted to bring up. Your book spends a big portion dedicated to it. What happens to prices in the scenario you're describing, Larry? Are we going to get lower prices?
Well, yes, no, not in the short term. I mean, really, there's no, mathematically, there's no way to not have a serious inflation, which is why I think betting on, sound money assets right now is kind of a no-brainer bet. And that is, why is that true? It's true because there's just too much debt, and the debt needs to be devalued against the currency. The only way to devalue the debt against the currency is to write the currency up, which is effectively inflated. So if we do this reset, we're going to have a very painful one-time high rate of inflation. Having said that, we would then, I think people would be able to tolerate it if they knew that on a go-forward basis after the reset, there would be zero inflation because we would be on a sound money standard. And so what I'm advocating for is a one-time reset as opposed to another 10 or 15 years of pain, where we just get inflated away 10%, 7%, 15%, whatever it is, right? And this reset would not be simple. I mean, it would be hard, but again, I think people can take pain if they feel like the future will be better, and a sound money future would clearly be better, in my opinion.
Let's play out the scenario that a reset tied to gold, backed by gold, is being planned. What does that do to gold prices?
Oh gosh, it takes them to much, much higher levels. I mean, there've been many gold standards run over the years, and some, you don't have to have 100% backing of the currency by gold, but typically you have to have at least 40% backing. And that would imply a gold price of kind of 15, 20, 25, $1,000 an ounce. I mean, numbers significantly higher than we are today. So, and it could go higher. There's, depends. I mean, probably before we do the reset, there'll be some more money printing. So all that new money printed will only make that number a higher number. So my personal target for gold, Danielle, is I think we easily hit 5,000. Maybe, this year, but certainly in the next several years. And then after that, I think we hit, and then I think after that we hit 10. Beyond that, it gets very fuzzy. I mean, we really don't know what the policies they're going to pursue are. If we get a Stephanie Kelton as our Treasury Secretary, she's the MMT woman. Gold's going to infinity.
Definitely. Well, no, I just laughed because having covered this market for so long, talk of $5,000 gold just seemed insane, right?
Right.
And now here we are. I mean, at this pace, it could happen very easily.
It'll be there by year end at this pace. I don't think we're going to get there this year, but none of us really know, and it's a very chaotic situation. And the problem most investors have is that they're looking at the last 40 years and they didn't see any kind of chaos like this. I mean, everyone bought the dip in the stock market and everything was deflationary. And you and I and all the gold people, we've known for a long, long time these pressures have been building. I kind of compare it to like an avalanche. I mean, the snow just keeps on falling and the thing looks stable, right? That's how the economy looked. That's how the markets look. But, snow keeps falling and the cornice gets bigger and bigger. And then eventually, you get enough, another flake falls and that's it. And it triggers it and boom, the whole thing resets. And that's it feels to me like that's kind of where we are.
What role does Bitcoin play for you in this equation?
Yeah, so as you guys all know, I'm a lover of Bitcoin as well as gold. I love them both. I hate it when people in both camps argue with each other because they're both right for different reasons. Gold is right because it's 5,000-year-old money. It's analog. It can't be debated, can't be debased other than just what comes out of the ground, etc. And so it's fantastic. And I own a lot of gold, and all my older clients own gold because it's less volatile and it's the thing that protects them. Bitcoin is a emerging form of sound money. It's an emerging monetary technology. They developed something called digital scarcity, which no one thought they could do. And I believe it's sound enough to eventually qualify as being a form of digital gold. And because it's being adopted, they both enjoy the fact that governments are printing money, and so therefore they're getting more valuable. In the case of Bitcoin, it also enjoys the fact that we live in a digital world. And adoption is growing. So right now, very few people own Bitcoin. But I think as time goes by, just as in the beginning, very few people use the internet, and then we all use the internet. And it's a very similar model in my view. And so I think more and more people are going to adopt Bitcoin because it's easy to move around, it's easy to store, it's easy to verify, etc. And so to me, it is emerging as a digital form of gold. And if you look at its performance over 16 years, it's really crushed gold. And I think it will continue to outperform gold. But the price you pay for that outperformance is extremely volatile, and people who go to buy it, have to be prepared to see it go down 50 or 60%, and it does that. It's done it repeatedly. So, I always recommend to my clients that you be nuts not to have some of it because it's got so much asymmetry and upside. Mm-hmm. But you buy the level, buy 5%, 10%. You pick your number, but buy the level which that if it goes down 50%, you're not going to freak out and sell it. You're just going to. In fact, you might buy some more, or you're going to wait 4 years because every 4 years it'll be at a new high. Historically, that's what's happened. So I think it's very important to understand that. But a lot of people, have closed their minds to it, and people I respect, people who are good economists like Peter Schiff, they just don't seem to get it. And I've tried multiple times to convince him and others of it. But, Frank Juster, who I have a lot of respect for, and they're just not there yet. And I think, I would suggest to them read my book and understand the arguments behind it. I mean, to me, there is a risk. The biggest risk of Bitcoin is technology. And it's the reason why I was always skeptical of it. I thought this is a computer and computers blow up. And so, we all know computers are unstable to some degree. How can you have money based on computers? Well, as it turns out, because it's distributed, because there are a lot of nodes, a lot of miners, etc., I think they've solved that problem. And so I no longer worry about it technically blowing up. But if you want to complain against Bitcoin, you complain that the technology might blow up. I don't think it will. The other thing that could happen is if people lost interest in it. But there's no evidence of that happening. Every year, more and more people are buying it. So to me, it's something that every investor who's looking aggressively to grow their wealth should have. By the way, in my most recent quarterly report, I talked about the fact that people ask me why are gold stocks performing so poorly, junior gold stocks, and I said, one of the possible theories for that is that in the past, if you wanted to have alpha on top of gold, you bought gold stocks because they outperformed gold. But 20 and 30-year-olds aren't buying gold stocks anymore. If they want alpha, if they want monetary debasement alpha, they're buying Bitcoin.
Interesting.
Yeah. Isn't that interesting? Yeah.
Yeah, that makes sense. That does make a lot of sense. And yeah, the mining industry.
I think gold stocks are still great. I own a ton of them. They're going to do really, really well. I'm just suggesting that some of the demand has gotten sucked away by Bitcoin.
Interesting. Yeah. Larry, last point I want to end on, but it's a big one, is this Trump versus Powell. How does it go down? And more importantly, do you think the Fed's independence is at risk?
Yeah. So I really don't know the answer to that. I don't know what the Supreme Court's going to say. They've asked for a ruling on it. My sense is Powell is a tough guy, and he's going to stand tough, and he's not going to cave into Trump. I actually think it's a little bit of a moot point because what I think is going on is Bessent is going to force Powell's hand. I mean, Powell, if the financial system gets unstable and
Yeah,
starts to come unglued,
right.
Powell is going to say, forget the inflation mandate. I've got to keep the ATMs running. It's an emergency. I have to do it. So Powell really needs the political cover to do what we all needs to be done. And I think Bessent lit the fuse to create, the explosion that's going to have to cause Powell to do the big print. So
It's
that's kind of how I see it going down, and all the other stuff is just kind of political posturing back and
that's
forth.
that's that's
I don't think
yeah,
Powell's going to give in. I don't think Trump's going to give in, right?
you summed that up so brilliantly. It's like the power play of two brains, right?
Right.
And I think you're right. I think that Powell at one point is going to have to put a floor in, and they're
Yes.
going to get the low. They're going to have to do the lower rates.
Oh, there's no doubt. I mean, look, when the long bond goes through 5% and the dollar, is falling into the 80s, the stock market is down 30 or 40%. I mean, in the COVID example, the stock market was down 32%, and Powell panicked and printed like crazy. Stock market right now is down round numbers, just around 20%. I mean, another 20% down with an economy falling apart, no shipments from China, unemployment rising, et cetera. Well, they're going to change their tune. The mandate is going to become we've got to support the economy, and we've got to worry about our unemployment mandate. And yes, there's an inflation risk, but we'll have to deal with that. I can hear him saying it. He'll pivot just like he did before.
Yep.
So that's coming, but it's going to take a little bit more pain. And Bessent is out there making sure that we administer the pain.
Yeah, it almost sounds like more printing than helicopter Ben Bernanke.
Oh, it'll have to be. So each time it gets bigger, right? We know that. I mean, Bernanke printed 3
Yeah.
trillion. It took him 4 years. Powell printed 5 trillion in 18 months. This one, I think this will be between 7 and 10. They'll have to do yield curve control. I mean, if they did that, entire U.S. bond market's $37 trillion. If they bought their balance sheet 6.75, they bought the entire bond market, their balance sheet would go up 4x. I mean, the point I'm trying to make, Danielle, that's most important is all of these things are inflationary. How inflationary? We don't know. But if you live in an inflationary world, the mistake the average investor is making is they're thinking the last 40 years is going to continue, and it's not. We now live in an inflationary world, and so that was the point of the book. I'm trying to tell the average citizen, get yourself ready for serious inflation because it's coming.
Okay,
Right?
you just raised a great point. The biggest mistake is we're assuming the next 40 years will continue. Getting
Correct.
yourself ready. So for you, that obviously involves own gold, own
Yep.
Bitcoin.
Physical gold, physical silver, Bitcoin. In my case, I've got gold mining stocks, silver mining stocks. I run a fund that does those things. Real estate actually kind of works. I mean, the government can't print it, but they do tax it heavily, property tax. I know a lot of people my age, and I'm 67, who are, all in on stocks, and because it's the thing to do. It's worked since '08. It's worked, and I think that the conditions have changed, and people need to really rethink that allocation.
And if I could just add one thing, I was speaking with people who wanted to get in at $3,000 gold, but they thought, I can't do $3,000 an ounce. And it's hard to, inform folks,
So,
that $3,000 is going to be in the rearview mirror soon, and
I,
here we are.
yeah, I've got a great analogy on this. I've used this on other podcasts. I like this analogy, if you
Okay,
indulge me. So,
please.
uh, okay, so gold. So the financial system, the monetary system, as currently constructed, is the Titanic. Okay, I mean it's you can't print forever. They're going to have to inflate. It's going down. Eventually, it might even fail. Okay, gold is a seat in a lifeboat, and Bitcoin is a seat in a lifeboat. So I bought gold at $1,000 an ounce. I bought it lower than that, 300 an ounce way back in 2000. But I bought some at 1,000 an ounce, and now it's 3,000. And as you say, I have friends say, "Oh, I can't pay 3. You paid 1." Okay, fine. Or Bitcoin today, I can't pay 85. You paid 10,000. Okay, fine. But okay, so I got my seat for 1,000 or 10,000, but I have a seat in the lifeboat. It's 3,000 a seat or 85,000 a seat. Bid to you. What do you want? You want to stay on the Titanic, or you want to get in the lifeboat? Because I think and that's perhaps a bit extreme. I'm not sure the monetary system is going to completely fail, and the boat's going to sink, and we're going to go to hyperinflation. But I do know with a high level of confidence, that we are going to have more inflation. And so if you believe we're going to have more inflation, as I do, I still think we're relatively early in both of those moves. And I can see much higher numbers for both of those assets. So.
Okay. Even though, what's their counter argument to folks who say, well, the tariffs will actually will lead to deflationary environment?
Yeah, so I don't see how tariffs can lead to a deflationary environment. I mean, eventually, they could help the government balance its budget, but they really slow everything down. And, yes, I mean, they are deflationary in the sense that the Smoot-Hawley tariffs in the 30s were deflationary, and they really crushed the economy. I guess the bet I'm making, Daniela, is that if we get into that kind of a crushed economy, the way the Fed will deal with it will be to print money. So yes, there's a way out of this without inflation, and that is let the economy just collapse and have widespread bankruptcies, widespread failures, et cetera. But that doesn't really lead to balancing the budget, because in these downturns, social payments go up, tax receipts go down. I mean, I just don't see, I'm kind of at a loss for how to think of a scenario where the government doesn't print a lot of money. I just don't see it.
Well said, Larry. Like I said, get his book. I actually think this book should be in all high schools, Larry. I also think it's a great gift to give your friends and family who want to learn, because it's written, like I said, in a very easy to read. I love how you said you made your wife read it first, right?
Yeah, she was my test case. She doesn't know anything about this stuff. She's a writer and an ad exec, and so monetary stuff. She's like, "That's your department." I said, "Great, you're going to read this."
Yeah. So it just appeals. It appeals to all levels. The big print, what happened to America, and how sound money will fix it. Get that copy. And we spoke so much about gold buying. As always, I invite you to reach out to my colleagues at ITM Trading. Reach out to us, and we can help you build a strategy based on owning physical gold and silver, and tell them Daniela sent you, and they'll take extra great care of you. Larry, thank you for your time.
Oh, thank you, Danielle. I always enjoy our conversations.
I do as well. And I like to see great guys like you succeed. So like I said, get that book, folks, and we'll see you soon.